Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let us get started. Wall Street indices and global markets lagged direction following a tumultuous trading in the previous week amid rising trade tensions. U.S.-China tensions rose to a new high after China halted shipments of key materials and canceled aviation orders, retaliating to the U.S. tariff increase to as high as 245%. Global investors continue to sell U.S. dollar-denominated assets amid waning confidence in the U.S. safe haven status. The persistent selling of U.S. Treasury notes is likely to continue in the months ahead as foreign investors start the process of trimming U.S. holdings amid the U.S. attempt to weaken the dollar, raise trade barriers, and restrict immigrants and tourist inflows. In short, the U.S. stocks indices are likely to test new lows in 2025. Bond yields are likely to climb above 6%, and inflation could perk up above 5%, or maybe even higher. In addition, the Trump administration's double talk has left most investors perplexed. On the one hand, the White House wants to increase manufacturing activities in the U.S. On the other hand, it withdrew all financial commitments made to advanced chip manufacturers by the previous administration. Trump administration rather bring back low value-added and low-wage jobs and promote industries of the past. In addition, one estimate that was released last year in 2024, about 600,000 jobs are available in manufacturing industries that are still unfilled. Let us review key economic data from around the world, and we begin with the U.S. U.S. single-family housing starts dropped 14% from the previous month in March because tariffs on imported materials raised costs despite falling mortgage rates. Housing starts are likely to fall further in the months ahead as higher tariffs kick in and Chinese suppliers slow down shipments to the U.S. Builders are likely to slow down new construction as inventory of unsold homes rose to a level last seen in 2007. Overall building permits rose by 1.6% to 1.48 million annual pace, driven by a 10% jump in multifamily buildings to 444,000 annual pace, and a 2% decline in single-family permits to 978,000 annual pace. U.S. retail and food services sales in March, adjusted for seasonal and calendar effects but not for inflation, jumped 4.6% from a year ago to $735 billion. On a monthly basis, sales advanced 1.4%. Total sales for the first quarter ending in March were up 4.1% from the year ago. Motor vehicles and parts dealer sales surged 8.8%, while non-store retailer sales advanced 4.8% from a year ago, respectively. No surprise that the motor vehicles and parts sales are rising because of the looming tariffs. The European Central Bank lowered its key lending rate by 25 basis points as widely anticipated. The central bank lowered its rate for the sixth meeting in a row amid weakening inflation outlook. The disinflation process is well underway, and the ECB estimated inflation is expected to settle at its target rate of 2% on a sustained basis. The ECB statement noted that the outlook for growth has deteriorated owing to rising trade tensions. China's trade balance in March soared from a year ago, driven by a surge in exports as customers front-loaded ahead of the U.S. tariffs. In the first quarter, trade surplus soared to $273 billion, about $100 billion higher than a year ago, providing a boost to economic growth in the first quarter. The trade landscape remains uncertain, driven by U.S. tariff confusion, and exports to the U.S. advanced 9.1% in March compared to a 2.3% increase in the first 2 months to February. Exports soared 12.4% from a year ago as factories rushed to meet demand from importers ahead of the surge in the U.S. tariffs. China's indirect exports to the U.S. through ASEAN bloc surged 11.5%, to Vietnam advanced by almost 19%, and to Thailand jumped almost 28%. China's imports fell because of weakness in the demand for foreign automobiles, and the ongoing weakness in the property sector contributed to the sluggish demand for steel and lumber products. China's imports declined by 4% in March to $211 billion amid weakness for automobiles imports because of the rise of domestic vehicle manufacturing. Japan's consumer price inflation slightly eased in March on an annual basis, but a surge in food prices overwhelmed the subsidies for electric utilities. Core inflation, which excludes fresh food prices, accelerated to 3.2%. The price of rice, the nation's staple food, soared 92% from a year ago, the fastest increase since record-keeping began in 1971. India's consumer price inflation eased for the fifth consecutive month and dropped to the lowest level since June. In other economic news from around the world, Japan's trade surplus soared amid rising exports and sentiment among large manufacturers rebounded following the rise in orders. The UK's consumer price inflation eased in March, but prices are expected to rebound in April because of higher utility prices and higher taxes on employers. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury eased 20 basis points and fell to 4.3% amid mixed economic data and ongoing trade tensions ignited by the policies of the Trump administration. Texas crude oil price rose 5% to $64 a barrel after the U.S. placed new sanctions on Iran and Chinese refineries processing Iranian crude. Moreover, the oil demand growth outlook was trimmed by OPEC, the IEA, and several leading analysts. Natural gas prices in Europe jumped 4% to about €35 per megawatt hour and rebounded from the decline in the 3 previous weeks. Meanwhile, milder and windier weather in Europe is likely to reduce demand from the power sector. The euro edged slightly lower to $1.13 after the European Central Bank lowered its key lending rates by 25 basis points, while cautioning that the growth outlook has worsened amid escalating trade tensions. The yen strengthened to 142 against the dollar as investors sought safety in Japanese bond amid the escalating U.S.-led trade war and ahead of the G20 finance ministers next week. Let us shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P index and the Nasdaq Composite resumed their decline amid renewed worries of stagflation and higher-for-longer interest rates following the Trump administration's determination to impose the largest import tax since 1934. European markets extended gains for the second consecutive week driven by positive earnings, and the central bank delivered rate cuts as widely anticipated. The Nikkei 225 stock average extended gains for the second consecutive week amid optimism about the U.S.-Japan trade negotiations. Hong Kong and China indices advanced after GDP growth in the first quarter matched the rate in the previous quarter, and the surge in export boosted economic activities. Indian market indices jumped 6% after inflation neared the low end of the target range, and foreign investors resumed buying as the earnings season gathered momentum. Let us shift our attention to merger deals, market movers, and earnings update from leading companies last week. Bank of America, Citigroup, JP Morgan reported better than expected earnings, but all the 3 leading banks also cautioned about the uncertainty in the economy and chaotic trade policy damage that it could do. Goldman Sachs posted strong earnings in the first quarter, and the financial service provider proposed a quarterly dividend and a stock repurchase program. BlackRock reported higher revenue and raised a quarterly dividend by 2%, although profits slumped in the latest quarter. JP Morgan reported strong first quarter earnings, and the company announced a quarterly dividend and a stock repurchase program, but cautioned that recession risks are rising. Wells Fargo posted mixed quarterly results, and lower expenses boosted profit, but the bank expected continued volatility and uncertainty. United Airlines swung to a profit in the first quarter, and the airline reported its best operational performance since 2021. NVIDIA booked a one-time charge of $5.5 billion after the Trump administration banned the company from selling advanced chips to China. ABB plans to spin off its robotics business after completing a strategic acquisition in China. The Netherlands-based ASML posted strong first-quarter earnings, and the Dutch advanced equipment maker semiconductor industry raised its annual dividend by 5%, but the new order intake negatively surprised some investors. Brunello Cucinelli reported double-digit growth in revenue in all key regions. LVMH reported lower revenue in the latest quarter despite strong sales in China. In the week ahead, investors in U.S. are looking forward to the release of business activities surveys and new home sales and durable goods data in the coming days. On the earnings front, investors anticipate results from Verizon, GE Aerospace, RTX Corporation, Lockheed Martin, Intuitive Surgical, Philips Morris, IBM, AT&T, Boeing, Alphabet, Amazon.com, and Procter & Gamble. In Europe, investors are looking ahead to the release of Euro area's consumer confidence data and business activities report, and the UK is scheduled to report its retail sales and consumer confidence reports. On the earnings front, investors are awaiting results from Nestle, Roche, EssilorLuxottica, SAP, Sanofi, BNP Paribas, AB, Volvo, Danone, Saab, Safran, Nokia, Michelin, Renault, and ST Microelectronics. In Asia, markets are anticipating Japan's manufacturing and service activity report, the foreign bond and stock investment report, and the Tokyo area inflation. India is scheduled to report its manufacturing and service activity updates, as well as bank loans and deposit growth data and foreign exchange reserves. China is set to release its industrial profit report on Sunday. On the earnings front in Asia, investors are looking ahead to the results from ZTE Corporation, HCL Technologies, Bajaj Auto, China Telecom, Sinuk, China Life, Hong Kong Exchanges, BYD, Fanuc, Prada, Fujitsu, Canon, and Ping An Insurance. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Rodara.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you